You're watching Beyond Market. Welcome, I'm Esther Awoniyi. Many thanks for joining us. On today's show, we'll discuss corporate governance regulation in Nigeria. You can join the conversation with the hashtag Beyond Markets, and you can also follow and send tweets to my Twitter handle too. It's at Esther O. Awoniyi. Now, Nigeria recently inaugurated the Securities and Exchange Commission board to formulate general policies for the regulation and development of the capital market. Ahmed Rufai Mohammed, President and Chairman of Council Institute of Directors Nigeria, joins me to discuss corporate governance regulation in Nigeria. Thank you, Mohammed, for joining us today.
Thank you, Esther.
Today we're going to look at corporate governance regulation, well, basically corporate governance in the country. Now, I know that the Institute of Directors, you monitor, you look at corporate governance regulation, you look at scenarios or incidents, developments around that particular subject. And one that has been in the news in recent time has been the crisis or the issue between a listed company on the Nigerian Stock Exchange, Oando, and the Securities and Exchange Commission. Now, I understand that IOD, actually, you're also looking into it by way of an investigation, and you have said that there are certain lessons as we wait for the outcome, that in the meantime, there are at least some lessons that can be learned as to how this has played out, how the SEC has responded to some of the, the alleged infractions by Oando, and how Oando too has responded, etc. But let me hear your thoughts on this particular issue, this particular case study, as it's also being called. Your thoughts on how it started and how the IOD is processing it.
Well, the Oando case emerged a few days ago. We woke up and then we were visited with this news about the fact that SEC had written to Oando complaining about many issues that had happened, largely to do with governance issues. And Oando had responded since then, and the issue has now been taken to the court, and it will be out of place to discuss it in detail, really, to be subject for that matter. But we can look at the general issues around it, clearly. Governance issues are not uncommon even all over the world. Okay, it's not Nigeria alone that has challenges with governance issues. When we talk about governance, we're talking about leadership at all levels, basically. But we talk about corporate governance, we're talking about governance at corporate levels. IOD has been responsible for advocating the issues of best corporate governance that should be enthroned in all our institutions in this country, both public and private sector. The case of Oando, when it came out, it was concerned to IOD, obviously. We felt very, very concerned, and we are looking into the matter immediately. We have two specific committees that are looking into this matter. One, Committee on Director Development. We have a Director Development Committee which does training for all directors that are members of IOD and others that are outside IOD membership. We have these programs that we run. We call them Company Direction Courses 1 and 2. We also have other advanced company direction courses. These are organized to try to train and develop capacity of directors in this country, develop their professional knowledge and attitude, so they can be able to understand and imbibe the rudiments of corporate governance, so nobody will be able to say, I don't know what is going on, why this is happening. I don't know why I should do this, and so on and so forth. Now, in the case of Oando specifically, we have also passed it to the Committee on Ethics. We have a Committee on Ethics which essentially has been working since last year to review the code of ethics that IOD has for the last many years. Okay. We have a code of ethics. The committee has revised that code of ethics. Council has approved it, and we're about to implement the establishment of a committee for disciplinary actions. Suddenly now this issue of Oando came about, and now we have passed that this particular case of Oando to that committee. Okay. They're looking into it with a view to advising council about how they can be able to address this matter as it's unfolding over time. Of course, we can't do anything for now because of the nature of the court case that's going on. Yes. Now, the issue of Oando, like I said, is not a new thing, really. Okay. In Nigeria, we have experiences of governance issues from as far back as 1993, or even earlier than that date. You can recall the bank failures that happened in 1993 during the military administration, when banks really failed in many instances because of poor governance issues. And government took action that was very strategic, really. What was strategic is they actually took the cases to court, in many cases, so that the court can be able to adjudicate properly about the fact that is this guy faulty or is this guy in default, and so on and so forth. And we have seen many banks have folded since then. And then in 2008, we had the global meltdown, when AMCON came in and CBN had to go to rescue of many banks again. And then we have had instances also of, the Standard Bank not long ago, even Diamond Bank issue some time ago, when some board members wrote to SEC, and now we have the Oando case. It's not uncommon to have these issues, but they shouldn't be happening really. Why? Because governance issues at the corporate level is so critical and so important. If you don't govern your institution properly, very well, you will be underperforming. When you underperform, you will not be able to make a profit, you won't be able to attract investors, you won't be able to pay dividend, and then you'll be able to sustain the business over a long period of time. Basically, if there's no governance in the country, investment will go away entirely. When we talk about lack of infrastructure in this country, yes, which is basic, they have to have infrastructure for you to be able to set up businesses, but clearly the absence of right governance at all levels is what investors are looking at now, not only in Nigeria, and many other countries, Africa and other parts of the world. If you don't have the governance that is appropriate, investors will not be able to come to your country.
Okay, if I could just come in here, let me take you back to that statement you made about the IOD reviewing your code of corporate governance and coming up with new ones. So what is different now? What has changed with the new, from the old to the new?
Okay, we are now addressing the issues of ethical issues, seriously, moral and financial ethical issues. Okay. We are looking at the matter seriously because it is tied to the issues of corruption that's been going on in this country. And we have been alluding this to be largely more in the public sector. It's happening also all over in other places. In
the private sector?
Private sector as well. Yes. In fact, if you look at it very deeply, you find that collusion with the private sector, with the public sector, is what makes corruption thrive and drive itself. If the private sector, that's supposed to be the driver for the economy, basically, and is involved in undertaking businesses on behalf of government, is not compromising itself in any way. Okay? There's the possibility that government will not be involved in corruption there. But clearly, when people are interested in ensuring that they safeguard their interests personally, they push themselves, they get along, they find, how do I make sure that I get this business? How am I going to make sure that I get this contract? And I'm willing to compromise myself. Pay money for it.
Sorry to butt in here. What about instances? Because I've heard, because we talk about, while we talk about corruption in the public sector, obviously we also talk about corruption in the private sector. But many times for the private sector, especially when it comes to getting government contracts, they complain most of the time to us journalists that they have to pay a bribe. They have to induce someone, that many times the public sector, some members of the public sector, make it difficult for them to do business. If you do not play ball, in quotes, you don't get certain jobs or contracts. So who protects?
But that's what I'm saying. I'm saying if you don't compromise yourself, okay, the private sector is not amenable to doing what the private sector is asking for. The possibility that we will minimize corruption is there in the country. Clearly, if the guy who is looking for the job is doing everything that he can, including corrupting people within the system to get the job, then you're going to have a problem, of course. So we are having two sets of people from the private sector and public sector who are now compromising themselves. They have interests to get money out of you. You have interest to get the job out of them. So you compromise yourself and you pay money and you get the job. That's what has been happening in the system. Okay, so in the last couple of years, where we've seen, you took us all the way back to 2008, where we saw, the banks crash and all of that, up until now, where we still have cases of, companies coming into the limelight based on issues around a weak corporate, governance. Of course, that begs the question: there's a regulator. What happened to oversight? Precisely.
It stops at somebody's table. The buck stops at somebody's table. So, what is to be said about that? Okay. Level of oversight or the quality of oversight.
Now, you see, IOD has been doing the role of advocacy in this country. We have been doing the role of advocacy through training programs, through calling people to a town hall meeting to discuss with them about the role of governance all over the country. We have been also engaging the government, including regulators, to discuss with them about how we can ensure that governance is enthroned in the private sector. Equally, also the public sector. Now, in the public sector, we have regulators: the SEC, which is responsible for regulating the capital market. We have CBN in the banking industry. We have CSE, which regulates generally companies. Okay. Then we have NCC, that regulates communication companies. Now we have the FRCN,
Financial Reporting Council.
Precisely. Okay. That has been established to regulate almost everybody, basically. They have now established a national code for corporate governance.
Now, the one that was launched in January this year?
In January this year. Okay. And IOD is partnering with FRCN to try to work out how we can be able to push the code right down to everybody so they can be able to understand clearly what that code is intended to achieve. Now, if you have SEC, for instance, they have their own code. You have CBN, they have their own code. Sectoral codes are there for all these different organizations. I expected these companies that are being regulated by SEC, for instance, to ensure that they work within the codes that are being established by SEC. Okay. Minimum. Okay?
At the minimum.
At the minimum, SEC established these codes. And there has been lapses in the application of these codes by many, many companies. And that is what SEC...
Because they're not clearly stated, or because they're gray areas, or some things fall through the cracks, or what would be... What can we put our fingers on?
You can't... you can say many things, of course. But largely what's happening in the public sector is what is happening also in the private sector. Okay? People are having selfish interest. Oh. Okay? Because of that, they are avoiding the codes. They are not applying it as it's supposed to be applied. In that case, then you have lapses, clearly. Let me take the case of Oando has been identified now. So that's conflict of interest, where directors in the company are quite sick. I'm not saying that is the case. If it were the case, of course, then governance has been infracted. Clearly, there is an infraction there. They have said that directors have shown interest in matters that the company is handling. Okay. Ordinarily, when you have a case where you have an interest in a board, at a board meeting, you declare your interest openly. I have an interest in this particular thing that's going to go on, and you excuse yourself from that board meeting. And that board meeting will take decision without you. And ideally, they're supposed to take an independent and partial decision, very objective, without recognizing that you have an interest in it. And I understand that Oando had made the case that some members of the board who had interest in those matters that SEC is referring to had recused themselves from the board meetings. They were not there at the board meetings when those things took place. But according to the regulator, the findings of the forensic investigation is that those people were in those meetings.
Okay.
So SEC is claiming this, and the other party is claiming the other side. So we have to have the court to decide what is going to happen in this case.
Okay, Ahmed, I'm going to have to take a break at this point. We'll come back, and I wanted to look in depth at the Corporate Code of Governance, one that was launched in January this year. Look at the principles, the objectives, and perhaps some recommendations that were made by outside analysts in terms of how we can better implement it. We thank you for your time so far. I've been speaking to Ahmed Rufai Mohammed. He's the president and chairman of Council Institute of Directors Nigeria, looking at corporate governance regulation in Nigeria. If you're just joining us, Ahmed Rufai Mohammed, president and chairman of Council Institute of Directors Nigeria, is with me today, and we're discussing corporate governance regulation in Nigeria. Thank you, Ahmed, for your time so far. Let's pick up from where we left off, still on the Oando SEC issue as a case study, looking at corporate governance regulation in Nigeria. For you, for the IOD, what are some of the lessons, even though it's still ongoing, but what are some of those lessons that can be learned from what is happening?
Okay, you can learn many lessons from what has happened so far. Even though, like I said, it's subject to this, you can't be able to comment on it widely, really. But you can pick out about what has happened so far, and why did it happen, and what are the issues that brought about this kind of thing, and what can we learn from this? Like I said, we have passed down now to our Committee on Corporate Development to look at it and see how they can develop a case study eventually on the outcome of this issue. It's resolved finally. That committee will develop a case study which will be studied together with other cases that we have on the ground during our courses at the Institute. So people can be able to see clearly at home, right here, what are lessons we can be able to learn from what has happened recently. And we're very interested in this case, more so because it has become a battle now, okay? So because of this, which is very, very interesting really. If they had just taken the issue as it came from SEC, okay, and said, okay, we accept, this has happened and so on. Now that they are arguing, okay, which is very interesting, because perhaps they have a case, okay, very well. They're arguing about it, we'll be able to see really, all the issues will come out from both sides. And we'll be able to understand clearly what really happened and how can we learn from this issue. Now, let me say this. Governance issues are issues that must be taken very seriously by all organizations, as I said earlier on. Now, we train people to be able to develop their capacity to be able to run boards properly. And part of what we are expecting is that you must have a corporate governance committee on your board that will oversight what is going on within the board, be able to ensure that all the various codes that you're supposed to abide by, including your minimum standard that you've established within the company. Because a good company establishes its own minimum standard of ethics. Okay? That must be respected. Those must be oversighted by the governance committee. That governance committee will bring a report regularly to the board about the fact that this has happened, this is happening, and so on and so forth. If you don't have that kind of thing, somebody watching over your shoulder about what's happening, and he's within you as a peer, you may have challenges really about how you can be able to address those issues. So we think, the absence of these kind of committees on these boards will not help those boards, really, seriously. That's one. Number two, we're trying to get all directors to understand that they must go through training programs formally, okay? It's not just that you are on the board. You believe you know everything, you can be able to handle the board issues, but you must be able to know clearly how a professional board is supposed to run. Issues to do with governance, which touches on ethical issues, for instance, conflict of interest, issues to do with risk management, issues to do with succession planning, and many others and so on. They are issues to do with governance issues. You must know how you be able to address them.
And the current corporate governance laws that we have do not already provide some insight or direction as to how these directors can conduct themselves? They
provide. Okay, like I said, the National Code of Corporate Governance that has been launched by the federal government through the FRCN is the minimum that everybody is supposed to abide by. You are expected, okay, as a very good corporate body to establish other standards that you'll be able to address, because each organization has its own unique issues. Now, this code, if you recall, it started, there was so much controversy around the code, because it started as three codes in one: the government code, the private sector code, and the not-for-profit code.
Okay.
And then there was a lot of hue and cry about it. Nigerians didn't want to accept this code, and then maybe the way it was handled by the then administration of FRCN, eventually the whole thing went dead until a new administration, a new management was put in place, and then they came up and took up the corporate governance. That's the one that's for private sector largely. The one for government and for not-for-profit organizations is yet to come out clearly. Okay, so we're now handling the one for corporate bodies, which is very important really. And the new administration had gone around, did the town hall meeting with those stakeholders, where views and opinions were canvassed, and everybody made their input, and had a technical committee under the chairmanship of former DG of PENCOM, Ahmed, and then they came up with a very good corporate governance code that they think Nigerians will be able to accept. And that was also tested. Awoniyi happens to be a member of that committee, and we also made input seriously into it. And after that had been finished, we accepted the code, and we are now part and parcel of implementing that code, really. Okay. We are working jointly now with FRCN as a partner.
Talking about implementation, because some analysts, experts who have looked at this code have said that, they appreciate it and they say that it's commendable, looking at the entirety of it. But some say that one overlap seems to be the lack of sanctions for failure to implement the code properly and effectively. Some of the lapses that they say may, be a problem in the future, a challenge, especially from an implementation perspective.
There are various ways of how you can implement the code. Yeah. The code has been established now to be on the basis of, you implement it, okay, and then you explain, all right? There is no compulsion in certain ways in how you do it. And there is no sanction. That is how they can punish you about not doing this. But clearly, if you implement and you explain, and they find that you haven't implemented it in the manner that it's supposed to be implemented, of course there will be something that will follow, clearly. They have not established sanctions that will be addressed, okay, in the code. But the FRCN is now leaving it yourself. When you have challenges about how you can implement this code, and they haven't implemented, they will go through it carefully, gradually, and be able to guide you. You see, you must take this step by step, really. Okay. Here we are in the country where there is so much infractions in so many ways, okay? Governance issues, maybe both at the government side, governance issues at the corporate side, governance issues at the not-for-profit organizations and so on, all over the place. And immediately there were talk about a national code for everybody. Okay. Then there was a lot of complaint. Now suddenly we're able to have a single code now, okay? That would be the minimum. Even apart from that, CBN still maintains its code. NCC still maintains its code, for instance.
And this is still easy for companies to I know that, different regulators, manage different sectors or industries, but is it still easy to maneuver for companies themselves?
It's not difficult to maneuver.
They don't get, confused or feel over-regulated?
No, I don't think. No.
Okay.
The minimum that we have under FRC is what you are going to have.
Okay.
Then there's certain peculiarities depending on where you operate.
Okay.
You operate in the capital market, you're operating also outside the capital market.
You have a regulator.
Okay. And then he tells you what you're supposed to do.
And this is all in line with current best practices of doing business in Nigeria. Was it tailored along those lines? Because that is another issue that was picked by some analysts who have looked at this document and said they're not sure that it's actually in line with that.
No, it's in line with best practice, not even Nigeria, but across the globe, internationally. We cannot do a governance code that is only peculiar to us. We must try to buy from what's happening across the globe. Like I said earlier on at the beginning, we are trying to attract investment, both foreign and portfolio, FDI and portfolio. And the only way that these investors can come in is when they ensure that they can have confidence in the way you are handling the businesses. If there's any doubt about your governance issues, okay, and the way you're handling the business, they will look.
But that is for the companies. What about the regulators themselves? I mean, we had the issue of MTN in the past, and even in Oando, some have been quite critical about how sometimes regulators in Nigeria handle cases or infractions and wield too big a stake, as it were, and potentially driving away or discouraging potential foreign investors. And we know that we tie corporate governance to confidence levels at the same time. But when a regulator is perceived to be, to maybe too harsh, for lack of a better word, it could send wrong signals.
Now, obviously, I understand. Like, for instance, yesterday I was discussing on this matter of Oando, and somebody made the case about police invasion of Oando premises, and said that, international community saw this on television, and everybody was scared. If you have a business like this, how can you be able to be safe? You can be sure in Nigeria that you are safe because you run a business. The case of NTM also, when it came out, okay, there was a lot of people in a cry about it as well, and people were complaining that MTN is being persecuted actually, for no reason and so on and so forth. I agree with you. Maybe there are areas or situations or instances where there is an overdoing the matter, okay, clearly. But the truth is, those who are making the complaint largely tend to do it because they want to get sympathy of the public.
No, but what about in cases where it is clear that a certain regulator has been high-handed, maybe gone a little overboard? Not that there hasn't been an infraction or an offense. Yes, there's been, but your handling of it, has come across as maybe going a little overboard than what is stipulated in terms of what your powers are in punishing or, laying out punitive measures for the...
Of course, if that has happened, it's very wrong, obviously, okay? I haven't got any particular incident that I can be able to cite here now, all right? Maybe you can say many things, like I said, the MTN case and the Oando one police, were made to go. But in other countries too, when this has happened, you find the police all over the place looking into what's going on, because the general understanding is a criminal offense you have committed. Okay? That's what the regulator is saying. You have committed a criminal offense, and accordingly you must be treated in a criminal sense. Not that you're a criminal yet, okay? But you must be treated in that sense, which means they have to invade your place. They have to get people, the police to get involved, and so on and so forth. But that does not necessarily, give them the right, okay, to take the action that some of them maybe are taking in terms of, being, overbearing, okay, on the matter, so on. I don't think we will not support that kind of thing, obviously, at Awoniyi. We will insist that you follow this very civilly, okay, and very maturely, so that you let those guys know what's going on. For instance, if somebody tells you, I have not been informed about an infraction, I should be called to a meeting, that's reasonable.
Given a benefit of the doubt or
precisely.
Fear, like Oando is alleged.
No, I suppose, yes. When they have found a situation that has developed, as in the manner that we're talking about in some places, I expect they will call you to a meeting, okay, where all of you are sitting down and then you discuss these issues clearly. Because ordinarily, those who do the investigation would have sent you, okay, a questionnaire that will ask you to respond to many issues, like typical company audit. There will be a management letter that will be given to you. The management will be told, these are the issues we have found, and so on and so forth. Can you please respond to those issues, and so on. And obviously, the investigator who is doing the investigation will also clearly ask you to respond to those issues and indicate to you that they indicate lapses of corporate governance, to do either with a conflict of interest, for instance, or an ethical practice, or one of those kind of things. And you will be aware right away, from that stage of investigation. But after the investigation has been finished, I suppose the regulator will call it a meeting, where they now bring to you openly about the fact that these are the findings against your company. All right? You still make the effort to explain further. But obviously, by then, the story will be different.
Okay, Mr. Ahmed, we're going to have to leave it there. Thank you so much for your time on the show today and, of course, giving us that insight on how trends in corporate governance regulation in Nigeria. Thank you for your time today. I've been speaking to Ahmed Rufai Mohammed. He's the president and chairman of Council Institute of Directors, Nigeria. Well, that's our show for today. Thank you so much for being a part of it. But remember that you can watch the show at 5 p.m. West African time daily and have access to all previous episodes of Beyond Market on our website, that's cnbcafrica.com. You can also stay engaged with the hashtag Beyond Market. And of course, you can send tweets and follow my Twitter handle at Esther or Awoniyi. From myself and the team, it's bye for now.